In this tutorial, we will look at the Mr. Cambridge question. Mr. Cambridge deals with the preparation of final accounts of a sole trader with adjustments. You should have a copy of the question in front of you before we start. A copy of the question is available on the website. The Mr. Cambridge question and the suggested solution are dealt with in 3 tutorials. In the first tutorial, we look at the question itself and the approach that we should take to the question. In the second tutorial, we look at preparing the income statement, and in the third tutorial, we look at preparing the statement of financial position. We will now start by looking at the Mr. Cambridge question itself and our approach to the question. The Mr. Cambridge question. In this question, you're presented with a trial balance. If you look at the top of the question, you can see, just up here at the very top, the following trial balance was extracted from the books of Mr. Cambridge, a trader, on the 30th of June 2010. We have fairly typical items listed in the trial balance, and at the bottom we have the debit and the credit balances. Further on down the page, you see we have additional information. These pieces of additional information are the adjustments that we'll have to make. And then, what are we required to do? We are required to prepare an income statement for the year ended 30th of June, and we are required to prepare a statement of financial position as at the 30th of June. We will now go back to the trial balance. I will go down to the trial balance and I will indicate where each component in the trial balance has to go. If something has to go into the statement of financial position, I will put a little SF beside it. If something has to go into the income statement, there are 2 parts of the income statement, the trading account and the profit and loss account, so I'll put a little T beside it if it goes into the trading account part of the income statement, or I'll put a little P beside it if it goes into the profit and loss account part of the income statement. So starting at the top, we can see capital goes into the statement of financial position. The next 4 items there, they all go into the statement of financial position. Actually, they are our non-current assets. The next 3 items there, they also go into the statement of financial position, and these 3 items here represent the depreciation on our non-current assets up to the beginning of this year. Sales and purchases go into the trading account. The accounts payable, that goes into the statement of financial position, and it is a current liability. The opening inventory is in the trading account. The accounts receivable go into the statement of financial position, and that is a current asset. Likewise, the bank is a current asset. Then we have a list of expenses here. We've rates, wages and salaries, light and heat, insurance, motor expenses and bank charges. So all of those together go into the profit and loss account part of the income statement. And then finally we have the drawings, which goes into the statement of financial position. The drawings, of course, will be linked up with the capital in the statement of financial position. We now have a look at the adjustments. The items in the trial balance have been included in the trial balance after the double entry process. If we're going to include adjustments, we must also enter them twice. So in other words, the inventory here will go into the trading account and it'll reappear in the statement of financial position. It will be a current asset. The depreciation figures will go in as expenses in the profit and loss account, and they'll also reappear in the statement of financial position, and we'll have to draw up a special table to deal with that in the statement of financial position. We have an accrual on the light and heat for 500. So what I might do is just go back here and put little asterisks on my light and heat, so to remind me to make an adjustment on that. An accrual means that the amount was incurred but wasn't paid, so what we'll do is add that on to the light and heat in the profit and loss account, and it'll reappear in the statement of financial position as a current liability. Then finally we have the insurance, which is prepaid. So if I go back here, again I'll just put little asterisks on the insurance to remind myself that I need to adjust that figure. And I go down here, and the insurance prepaid, it'll be an adjustment on the insurance in the profit and loss account. A prepayment means it was paid, but it's not actually for this year, it's for next year, so I'll be taking it away, and it'll reappear in the statement of financial position as a current asset. So now we have reviewed the question, and if we look at the trial balance now, we know where everything is going to go, and if we look at the adjustments, we know where everything is going to go. And remember, for the adjustments, everything has to appear twice. Once in the income statement, either the trading account or the profit and loss part of the income statement, and then everything will reappear in the statement of financial position.